I'm the Boss Hog, and this is a market roundup for the 12th of March. The FTSE 100 recorded a modest rise for the second day running, up 0.36%. It was led by Burberry, out in front by a big margin and up 7% on the day. There had been fears that with COVID, shoppers might be buying less of its wares, but the company was bullish and analysts were impressed with the company's resilience, many pointing to the branding as a key defensive moat. Financials were also a clear standout after some recent profit taking, as inflation and bond yields made investors think interest rates may be rising sooner than expected after all. Barclays was up 3.5%, NatWest and Lloyds 2%, whilst even my least favourite of the big banks, HSBC, managed a near 1% rise. Insurers were also doing great, M&G up 3%, Legal&General up 1.5%, though my play, Aviva, was down 0.4%. This appeared to be more of a case of profit taking after a recent run-up in recognition of a reorganisation starting to pay dividends. The UK actually has some terrific insurers for anybody not aware, and whilst Aviva is probably the least good, I believe it has the most capital upside. If you want some yield though, you could do much worse than Legal&General and their 6% dividend. The fallers were led by Berkeley, who warned profits would likely be flat for the year. It looks set to underperform other house builders, and its shares, already down 40% in a little over a year, fell a further 6% as investors were disappointed after a supportive budget. Of all the house builders not to own, this is probably the one. There was some pullback from Fresnillo after yesterday's little spur, and investment funds with heavy US tech exposure like Scottish Mortgage Investment Trusts also featured on the naughty list. The FTSE 250 couldn't quite keep up, and it fell 0.1%. I get to feel smug by telling you Marshalls fell over 5%. I did feel yesterday's 8% surge was a bit overdone and suspected there'd be some reassessing, and here it was today. However, the worst fall was actually Playtech, falling over 9% off the back of some pretty shocking results. A gambling company with significant online exposure, it nevertheless has significant casino operations as well, which have been closed for much of the year. As a result, it swang from a €60 million profit to a €73 million loss. In fairness, that does seem a bit harsh, and this is now at a price I might consider entering in at. Top of the rises on the 250 was Tullow Oil, which despite revenue down 17% year on year, was 7% better than analysts' expectations. This is one of those stocks for the brave oil investors, as it swings a lot depending on the exploration success and failures, though a strong oil price doesn't hurt. Other rises was a mixed picture, but I thought it was weighted toward companies that should do well as the economy opens up, such as bingo operator Rank Group, recruitment company Hayes. They were up 5% and 3% respectively. Carnival Cruises and bus operator First Group were also both up 2%. Over in America, it was also a mixed picture. The NASDAQ again faltered, falling 0.6%. It was more about those pesky bond yields, and the will potentially see depressing future earnings for the high growth companies found here. Those same future earnings, they justify PE ratios well into the 30s, 40s, and even higher. Google and Facebook both fell over 2%, whilst Amazon, Apple, Microsoft all recorded falls a little under 1%. Honestly, I was kind of a bit surprised it wasn't worse, but there's still a lot of good companies here and investors, myself included. We weren't really sure which way to go. I largely stayed away from tech today as a result, going for UK recreational plays instead. Where there was no issue of confidence was the Dow, which rose almost 1% and is now at all-time highs. Predictably, recovery stocks were the standouts, Boeing up 7% and Caterpillar up 4%. Likewise, on the S&P 500, which finished up just 0.1%, was American Airlines. They finished up 5%. Asian markets were pretty split. The Nikkei is again threatening the 30,000 level, and it rose over 500 points, or 1.7%, whilst the Hang Seng fell 2.2%. The Shanghai Composite and the Australian ASX were both up a little over 0.5%. Bitcoin fell 5% from recent all-time highs, but still sits at $56,000. Meanwhile, UK investors in US stocks continue to feel the love of a softening sterling, which has now slipped firmly toward $1.39. That's everything from me, the Boss Hog. Enjoy the weekend and good luck with your investing. Thanks, everyone.